What does it make you feel? Have I lost my emotions somewhere along the trail? Maybe not. But what I kind of would do to this is, when will market come back to normal kind of trading? If you go to yen pairs, for that matter, it is this small move here is now 300 pips. Like,
Yeah.
if you try to take a normal trade with normal stop loss, that is like 6 times your normal lot size, the stop loss. Sorry, that looks like a 50 pip one, but it's actually 300. Is that a market you want to be in? Is that in your calendar? Is that in your books? Because what I want you generally to trade is somewhere around like 80% of the 80% of your trade should be like, sorry, how do I explain it? What you're doing, it should be around 80% of the market move. So you're not trying to catch the bottom, you're trying to catch the peak, but you're somewhere in the middle. And this is in nowhere in my books, or what I normally do as a trader. I don't trade. This is way outside my normal trading kind of conditions.
Yeah.
So
yeah, no, there's nothing wrong with waiting for the dust to settle to make up, your mind when you have a more clear idea of not necessarily what's going to happen, but maybe just waiting for the market to slow down for a minute, calm down, let the dust settle a little bit. It's like a lot of times people will wait to trade after a news event, like 15 minutes, just to let the chart cool off, dust settle, and make a decision from there. There's no shortage of opportunities. There's no need to rush or be brash with your decision making during a time like this, because again, market could be much lower by the end of the day or much higher. It's just very, very volatile. So it's moving all over the place. So yeah, Ivan, I want to thank you for coming on. We got our next guest coming on. Do you have something else to say? Last word.
This is why we say trading forex is risky. Trading markets is risky because of these days when it just all of a sudden snaps in whatever direction it did, or whatever pairs it did, doesn't really matter. This is the days that you actually are losing your risk management for.
Yes, exactly right. These are your trial days for sure, where you earn your stripes. Ivan, thank you very much for coming on the show. We're going to let you go, but before we do, let me just drop a link here, or we had a link dropped in the chat. Guys, make sure to go subscribe to Ivan if you want more content from him. He's got his own YouTube channel. You can find him in our Discord channel. If you're in the Discord, he does one-on-one coaching. If that's something you're looking for, make sure to DM him or hit him up on socials. Ivan, thanks very much for coming on the show today, man.
Thank you a lot for having me.
All right, see you next time. All right, guys, we're going to now take just a quick break. We should be back in just about 30 seconds to a minute with Chris Pulver to take a look at the markets here today, bringing in some more takes on this wild market event that we are seeing with the stock market down heavy today, yen up a lot today, just volatility in every direction. So stay tuned. We'll be right back with Chris after this. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat, as well as in the description of this live stream. Check out Vantage. Now back to the show. All right,
Nick.
guys, we are back. What's up, Chris? Welcome back to the live stream. And
yes, sir.
What's the latest? There's no shortage of what we could talk about today. You got the yen moving, you got the stocks moving, gold moving, everything is flying around. What are you watching most today?
Well, watching everything. So this all kind of started. I have a Sunday webinar that I do with some friends, and I started taking a note of the futures market last night. And so I was a light sleeper just to see, like, okay, let's see what happens. I mean, we got a sample of like things are a little overreactive on Friday, right? Like, I mean, we were noticing some pretty critical levels. I just think what's funny is this is the technical stuff that I had talked about, but how it happens is just so violent to the downside. And so, like I said, I saw that we gapped lower coming into Sunday's futures market. We started pushing lower, red on the night, and I'm like, this is going to be a rough Monday open. Yeah. Like I said, I was a light sleeper. I was just monitoring things, watching things, and look, man, like it's not great. I mean, looking at the bid ask prices that are all over the place. If you're in the futures market, things are pretty darn wide right now. But I just finished up a live session. As happy I was coming on with you guys today for this reason. Look,
Yeah.
it can always be different, right? But is this 2020? Is this a pandemic? Is this 2008 with a global financial crisis? I don't think that it is. But man, it's amazing how this market will treat it like it could be or might be. And it's just crazy risk off that we're seeing, in the last I mean, we've only been open for 40 minutes as far as stock trading, but futures market last night at 6 p.m. we're showing this the entire time.
Yeah, and you got to think about this too, Chris. Here's something to I was just mentioning to Ivan. If we switch over to my screen for just a second, I want to look at, this time last year. This is, true to seasonality right now. We are seeing this thing roll over right in line with what happened last year at this time.
Yep.
But there's a difference, and the difference is the trajectory at which case this current pullback is happening. So last year we saw about a 10% correction between the months of August 1st right into the end of October. So we saw about 11% dip in the market. That ended up being a really good buy the dip opportunity before it went much, much higher. But it took 90 days for the market to move 11% down. I mean, hindsight 2020, but my goodness, a 10%, 11% correction over 90 days sounds a lot less threatening than, I got to admit, what we're seeing here today, which
Right.
is that same magnitude of a move on the S&P 500 happening in just 20 days. So a couple weeks. So my question to Ivan, and now my question to you is, does this magnitude matter? Does the speed, the trajectory, the volatility increase that we see this time around on this pullback, does this feel different than it did in April? Does it feel different than it felt last year around this time, where we are seeing, normal percentage pullbacks, but the speed at which this thing is pulling back is a little bit concerning. It might have more room to the downside. And I am coming from a bull, so I am bullish on this market. But what do you think?
Yeah, I think the speed is definitely concerning, because what it creates is, what you're looking at in your accounts and what you're discovering, in your trading right now, is that liquidity isn't necessarily there like we're used to it being. The bid, the ask is wide. This makes you like, you can't settle for bad prices. I know that right now. Here's an example. I put on trades. I put over 40 trades on last night, pending, and wondering if I got filled on anything this morning. Nick, I've been filled on nothing this morning. And let me explain what my positions were. So I looked at, just an easy chart here. Let me go to the SPY. Okay, let's go to the SPY. So I know my chart's a little messy here. Let me go to the daily. All right. So some of our very common, moving averages would be your 50, 100, and 200, right? Very common. I looked at trying to get filled right around the 200 moving average. I looked to get filled right around the 144 moving average. And I thought, well, if we've got a big gap from Thursday to Friday, and then another big gap from Friday to Monday, if this market stabilizes in here and is willing over the next maybe 30 to 45 to 60 days to do some gap fills or use the 200 EMA as a support level, I'm just trying to get filled. And, and I get it. Like, I'm looking for something like, let me give you a trade example. I've got a SPY here. So let me find that in my broker platform. SPY. I'm getting, like, if I can get like 40 cents on the dollar. So for example, on the SPY, I did a 525, okay, 525 by 524, which is now, $8 or $9 in the money. And I can't even get 45 cents for that credit spread. I have $1 risk, and I can't even get 45 cents for something that's almost $10 in the money. So
Wow,
that sucks. That sucks. So I mean, I get it. Like, maybe what I want is I'm not getting the fills that I want, but I'm not going to settle for like a market price. I mean, right now that 45-cent credit that I've got pending is trading for, 36 cents. So yeah, I get it. I know it's messy, but I see it. You don't. I'm just telling you, this is what I wanted to see. So I've got a 50, a 100, a 144, and a 200. And you and I pointed this out last week. I mean, if all we're doing is coming into these zones, you got to wonder if the buy opportunity is there. The NASDAQ, on the other hand, has broken through the 200. But broken through and closing below it and doing more damage below it is very different than actually just testing it as the first time we've seen it tested since October 2023.
Sure.
So,
And I've got the you've got the EMAs. I've got the regular SMA on my
okay.
Qs 200-day moving average. You can see we're just shy above
Right
it
there.
on the
Yep.
SMA, but as you pointed out, just around it on the EMA. So, maybe it's, but this is something we always, kind of point out. These are zones, these are ideas, these are not pinpoint, perfect indicators to hold a moving average. People
course.
use different moving averages. They use different, it's a feel. And I think that if you are a bull on this market, Chris, I got to say, I think if you're hitting the 200-day moving average, the classic equities buyer, spot, this level should hold. If it doesn't, if we break these 200-day moving averages, I think you got problems. I think you see more, I think this turns into, what are we looking at on the Qs? We are looking at currently about a 14% pullback in the Qs. I think if you break that, then you're suddenly looking at, maybe a 20% plus sell off in the Qs. I mean, that if you can't hold any of these support levels, I got to admit, I was wrong about being bullish. But again, I'm kind of at the last line of defense here with this level support, 200-day moving average. I like it long, but I'm waiting for, what I think could be, maybe a last capitulation move this morning. If it moves lower, I may take another stab, and we'll see if I get my heart broken a fourth time. But this is I've had 3 attempts, Chris, nothing holding. But again, if this bull market's going to hold its own, you would expect the 200-day moving average to hold. If it doesn't, I got to seriously kind of pause, hit the brakes on it.
Yeah. And I again, I'll just highlight what you had mentioned earlier. It's concerning how fast it happened, because right now for shedding, and it's, I know you mentioned over the last, roughly a month, right? How many trading days is this? It's been around 20 trading days, 19 to 20 trading days. Well, I think what makes me nervous is if it's going to get worse, there's no real savior until maybe the Fed rate cut in September. And I put this on my chart. Let me see if it's still on this VIX chart. I kind of wrapped up my live session today, and I wanted to reiterate this with you. I don't want to see the Fed step in and cut rates today. Or
I
this
don't
week.
either.
I don't. I think that's the worst thing that
Said
could
the
actually
same thing
happen.
to Frank this morning. I said there's a possibility they do it, but I don't want them to, because you do that. That's like when they halt a penny stock when it's trading, and it, like, let's say it gaps down, they halt it. The second that market opens back up, boom, it's much lower, because the market freaks out.
Yep. So I put for, let's just talk the bad. It feels bad. It already is, but the VIX has come down, 20 plus points off the highs. Really crazy. And it's just, the timing is so perfect to be wrong. I'm long at 1050. I get out at 19. I make some dollars. I'm long at 20. I get out. I mean, I had VIX calls on here that I would have I was not expecting a spike to 60. I don't think anybody was. I could see like the 20s and 30s, but not the spike up like we had last night in opening bell. I mean, by the way, opening bell today was not at 65. This was like all through the night in order to trade the VIX. And I looked at this morning. If I was going to fade this, and you can see I have it way up here, okay, I'm putting on like that worst case scenario 2008, 2020 VIX level of 80, 85. I'm going to try to get filled on a credit spread. But to me, it's still defined risk. Like I'm not doing anything like, because a put on the VIX is awful. If you're trying to buy, buy a put, it was, when we were trading at like 50 something, if I bought a put on the VIX, it was like a $30 debit. So you're essentially paying for all of it to go back to sub 20 to make any money on it. So it's a little stupid. But anyway, back to this point. Bad this week would be that the VIX continues to elevate and push up again towards these highs at 65. That's not a good thing. If we spike higher than that, obviously 80, 85 is the big level we saw back during the worst times in the financial markets. As far as the VIX is concerned, and obviously those weren't pretty times in the markets either. Asia contagion, right? Let's see. Japan needs to figure out what the hell it's going to do, because right now the Nikkei has dropped almost 27% since the high.
Crazy. Look at this. I'll just pull it up just because you mentioned it. You stay where you are on that chart. I'll show you this. You want to talk about 200-day moving average not holding? There's, as you just pointed out, the culprit today for everybody listening. Why is this? What's the root cause? Look no further than Japan. The yen skyrocketing, and the Japanese stock market. We talked about being a little bit concerned about a 10% drop in the S&P 500 in 20 days. Guys, in 26 days, the Japanese stock market has lost 23%. And that's a big stock market. That's a big global stock market that just took a huge tumble on yen strength. They raised interest rates at the same time. There was some speculation that the Bank of Japan took it as an opportunity on Friday to really, put pressure to strengthen the yen further, more intervention. You have U.S. economic data coming in light. Manufacturing PMIs last week were abysmal. And really aggressive selling. So where you're at with the VIX, as you just pointed out, high VIX, big sell-off in this chart. Take a look at the yen, down 2.3% against the dollar, or the dollar. Yen is up a lot against the dollar today. I still am holding tight to my USD CHF trade. This is the only thing working for me right now, Chris. I've got my USD CHF short position. Pretty much everything else has been no bueno. But one last point I want to throw at you, and then I'm sorry to cut you off, but I wanted to bring this point too. NASDAQ and S&P 500 are moving similarly now. Tech has held up a little bit better than I thought it would this morning. I would have expected, much, much harder selling, but it seems like S&P and NASDAQ, S&P has caught up on the sell side, it seems.
Yeah, I mean, your interesting divergence. I mean, the Russell, for all of its fun and just a moment of glory has just quickly dumped, and it's like I think the hopes and dreams of the catch-up trade, in my opinion, are flat right now. I mean, I don't think it's over necessarily, but my window of thinking we could hit this by the end of the year, that's now a pipe dream. I think that hitting 240 by the end of the year is slim to none. I think if the Russell can do anything here, it would be stabilized. That's about as good as we can get. And what I don't love is if we have, the Russell showing this structure and then ripping all the way back down here, that floor becomes a concern that we just go right back to these levels again. So again, let's talk technicals, right? S&P is down 3.25%. Qs are down 3.5%. They're moving pretty much in lockstep. The Dow is down 2.6. I mean, everything's bad. Volatility is up 150%. When you and I were actually talking in Discord. It's just ugly, to say the least. It's ugly. Bitcoin and Ethereum, certainly no picnic either. Those are down 10+%. Gold hasn't made higher highs. So, the fear trade, the hedge trade, gold really hasn't benefited from it yet. But anyway, I mean, I'm looking at this as here's where I would not necessarily want to see the markets move. Like today, this is going to be another big red flag today. If we end up closing lower than the open, that's probably not a good thing.
Not at all. Not at all. We just brought the hero of the day into the stream. It's Frank. He's got puts on a day like this.
I did not know I was on.
Well, sorry, we brought you in. So sorry, I was just touting on Frank for a second. Here's everybody getting smoked today, and Frank is the hero of the day with his puts on. How are you feeling today, Frank? Let us know. Let us all be jealous.
So I did take some profit, but
okay.
I couldn't really get filled at a price I wanted. I had these out of the money puts at 410
on the Qs. Yeah.
They opened up this morning. I got them for, I think it was like, I can't remember. It was like in the teens or 20 cents range. It opened up at around, I think it was 5. And
that's so good, dude.
I took some profits, but they moved so quickly, and because it was a 1 day out expiration, because I took it Friday afternoon, they changed so rapidly. I think I ended up getting out at like 2.
Sure.
So they were moving way too hard.
Gain.
But
yeah, what was the percentage gain roughly, Frank? Was it actually 1,000?
It was somewhere around there. It was up to, I think it was about 3,000 at the open.
Oh my gosh. Well, congrats on that. And Frank's been on the more bearish side of this market, absolutely playing it correct. So shout out to Frank. And we're trying to figure out, Frank, let me ask you, because clearly you're the one who's most tuned in right now. Where does this market bottom out? Is there a bottoming point? Is there a bounce trade, or do you think any bounces are just further, opportunities to add to shorts?
Yeah, so I think it depends on where we close today.
Yeah,
I didn't think we were going to hit directly on the 200-day for the NAS. Well, I thought we would end up there, but I didn't know it was going to be this morning.
Right.
Me neither, that's for sure.
Right.
And the fact that we've given more than half of it back, so we came down, I can't remember how much, was it like 1,000 points?
Yeah, something
Somewhere
like that.
around there.
Crazy.
900 to 1,000 points. We're giving, or we're pairing that loss right now, so we're above the 200-day. I think it depends on where we close. So if we get this sort of hammer candle, I think maybe price will hold up, but we'll just have to see. Like as soon as we open, there's just a buying frenzy. So this could be a level where people want to step back in. Even the way the candle is right now, I'm not really confident. It may even take a couple days, like it may hover around here, try to recover, and then we see a sell-off lower. We've come pretty far from our highs. So I don't know. I think if we do see somewhat of a big correction, that it's gonna be pretty fast. So if you're trying to trade to the downside, you're gonna have to make a decision immediately.
Yeah,
And if
and
you're
Frank,
trying to buy, this could be a time to scale back in.
yeah.
The
Here's something
200-day
to think about.
is
Frank,
the.
I don't mean to cut you off. I think there's
I'm
like a little
sorry.
bit of delay. Sorry about that. I just wanted to mention that what you're talking about with this like speedy buyback, I will go ahead and say this. Even though I am generally speaking more bullish, the feeling of this market feels similar. And Chris, maybe you can attest to this too. 2022, there were rips in the morning that would then get sold hard into the afternoon.
Yep.
And it was like that like every single day. Do you remember that environment? And it was almost like you wanted to kind of stay long very briefly and then take your profits and get out of the way.
Yeah, it's either you get in, you get out, or you are more positioned to fade it. I mean, the best way to make money in 2022 was fading those rallies, as we had essentially a 6-month correction. Like I said, I think the thing to watch today is if we finish with a green candle about the same as where we are right now, that's a little bit more relief as far as price action goes, as opposed to, here's what I don't want to see. I don't want to see green with a large body all of a sudden become something like this, where it's green on the day, but it's just absolutely smashed right back down to the lows again.
Yeah.
So if we finish red, that's even worse. If we close, that's even worse. But if we can maintain this, okay, fine. I think the problem is this market is so driven by news and data that gets put in, and sometimes it's priced ahead of time. The market's usually 6 to 9 months forward thinking, but there's no data, man. Like that's the problem. It's like if the Fed stays quiet and they don't do something silly like an emergency cut, then it's going to be, what does Japan do overnight? And how does that affect the U.S. market going into tomorrow? We have all these earnings reports this week. I'm not going to take, I mean, Frank knows it's one of my favorite things during earnings season is to place a bunch of trades. And like last week, I had like 6 out of 7 winners. I love doing that. But this week, I'm like, I don't care what earnings are at all, because all you're going to see is volatility.
Yeah.
And I don't know if it's going to be, the earnings might not matter at all. And it might be everything is down because the market is down and there's nowhere to hide. A good print could, temporarily push it higher, and then it messes up your downside because it's just going to fade anyway. So I'm probably going to bypass earnings for this week. I didn't see really any major notables. I like playing the Mag 7s. Those are super liquid and easy movers last week. But there's things I'll be watching. But more importantly is like, I just want to watch price. We're sitting at these critical levels on the Qs. We're nearing critical levels on the S&P. So I'll ask you guys this. Would you be surprised if the S&P this week is going to test the 200?
I think so. I think testing the 200 is giving back everything from the beginning of the year, which was that AI trade.
Yep.
That was on the NAS. They've already done so, but I guess S&P and Dow might complete their moves. I don't see tremendous upside. I think we catch big bounces every now and then, but I think we're going to test lower levels.
Yeah, I think that in terms of the S&P 500, man, it breaking this level of support, depending on how today closes, is going to set the mood, I think. If we take a look at my screen just for a second, I'll show you this. So look at the S&P 500. huge level of resistance here back in March that proceeded into April, where we saw the big, slide. And then when we took out that level, we held it as support, ripped from there. But now that we've come all the way down here and already showing signs of breaking that, it's a little tough. I think that for me, as this market pulls back, I'm, hesitant to try and call the bottom per se, but I'm taking stabs on the long side. I'm getting out quickly if I'm wrong. The idea that I have is overall earnings. You actually had this up on your screen, Chris. Earnings overall have been pretty good. There's been a lot of beats in the earnings reports that have been coming out. At the same time, US GDP figures massively beat. Today we had services PMI that came in better. So the tricky part about this is there's something in this for everybody. If you're a bull, you can point at stuff. If you're a bear, you can point at stuff. I do think that the bear case has substantially strengthened in the last 2 weeks, especially with the, kind of fallout event in Japan. That is massive. Like trying to time the bottom of that is going to be hard. But I do think that overall, again, big tech earnings have overall been pretty good. The stock market's earnings overall have been pretty good. But the question now is the economy able to hold up to not destroy those earnings in forward estimates? That's what's going to really, for the stock market, either hold this thing up or cause a much greater pullback. I think it's all about the Fed. Yes, it's all about, rate cuts, how soon, is the economy going to hold up? But it's about the labor statistics. It's about the economy readings way more now than it is about inflation. Inflation, I think, is a total side story now, because now we're saying, are these prices for the stock market indices justified on good forward earnings, or are they way too high and this market has more room to the downside to correct to meet those earnings? Chris, what do you think?
Well, as you were talking, the first thing I looked at was the advanced decline for today. 89% of stocks declining. 7.7% advancing. Look, it's not a pretty day, and I hate to say it, but somehow we're gonna have to remember August 5th, and you got to wonder, like, does it get worse than what we experienced from a Friday close to a Monday open? And like I said, I mean, for me, this was a futures window where from 6 p.m. last night to now, it's like I saw this all kind of happening and playing out, in real time. So. I think what would be, I'll just talk, scenarios and price action for this week. I do think that the market is capable of coming back to retest lows, but if we can bounce off those lows, that would be, to me, a pretty good stability level. Look, the S&P has nearly had a 10% correction. We're just off that 10%, like top to bottom correction. I think that, if that the market was like already made up its mind that a 10% correction is going to happen, we're almost there. And so a little bit more of a flush down, but maybe it doesn't hold. And that's like I said, just as if there's any real line of defense for the bulls to step their heels in or dig their heels in, it's going to be just at these lows, or kind of right around that 10% threshold. Because from there, I mean, what we do have from a technical side is we have ridiculous gaps to fill. Yeah. Now, I don't know how fast they're going to fill. I don't know if this week's earnings can kind of help stabilize things. Do we have any other major data this week? I mean, from the U.S. side, we don't have a lot, right? It's pretty light this week.
Today was like the biggest one, Chris. You had services PMI 51.4. Came in slightly higher than expected. Dollar still getting killed, though. Economy is expected to slow. Again, I will say, I think that the economic slowdown theory is a little bit overdone. I'm not saying necessarily that we can't enter a recession, that we can't enter, but I think that the probabilities, the market getting really, really bearish, fear is hitting highs. I mean, we can see that in the VIX, with a VIX spiking up to 65. I think that if you are a bull, the risk to reward gets a little bit better. And I think if you're in a bear, you're just kind of, if you're a bear, you're celebrating this move lower. And again, you played it correct overall. But I do think that, none of us would be surprised if you see a continued push down to that 200-day moving average. We all made that clear. Like, that price action wise seems very natural with this trajectory. We wouldn't be surprised if we see it flush down. And I think we also would not be surprised if from there you start to get this bull market kind of digging in and trying to hold those gains that we've made this year. The probability is, historically speaking, when you get a really strong first half, we've seen the stats on this. I'm sure many people in the audience have as well. Historically speaking, when you have a very strong first half of the year, the second half is historically outperforming the averages. So we'll see. But there may be more short-term carnage to come with the big sell-off today.
Can I bring your attention to this as well? The closest thing I see in price action in 2022 would have been summer of 2022. From this little cluster we had back in early June to when we started to rip here late June. This would have been, I guess, end of May into June. We had this big summer sell-off, and that price action as far as close, gap, that's the type of velocity that we just saw in the last 3 days of trading here this last week. So from Thursday to Friday, Friday to Monday, that's the only thing I can find. And that correction was around 13.5% before the market. And look, the market bottoms and the market ripped. From there, it went up about 20%. Now, it wasn't done. We actually came back and broke the lows again. But my point is, even through the start of this correction, when the market was deleveraging tech in late 2022, early 2023, it was a fairly contained deleveraging. This is not. This is chaos when you've got crazy 3, 4, 5% gaps to the downside on major indexes, which arguably shouldn't be as related and correlated as individual stocks. But I mean, when you've got Nvidia at 3 point some trillion, or now it's less because it shed a bunch, down 35%. That's tough, man. You got one of the biggest companies in the world. It's down 35%, trading like it's way more volatile, like it's friggin' biotech or something.
Yeah, and I want to bring that up just because you talked about this. I sent you this message this morning, Chris, about Nvidia. I'm going to pull it up on my screen for a second. So Nvidia, some of you guys who are regular watchers, a lot of new people are probably in here. We got 1,800 people watching this live stream right now. So hello to everybody. Welcome to the show. Nice. Today is a nice day for interest spike. Everybody's wanting to know what's going on. So hello, welcome to everybody. So a couple weeks ago, we talked about Nvidia. All of us remember Frank and I and Chris and a lot of the other guests. We're all looking at Nvidia like, man, this thing just every single freaking day we'd open up the charts and Nvidia's up another 3% day in, day out. Yep. And Chris, Frank, you and all three of us have discussed this many times about how when this sort of stuff happens, it doesn't last forever. It's really frustrating when you're on the sidelines, but look how fast this market has changed. And I'm going to say this because this was my feeling during that time. I said, and Chris, you and I discussed, and Frank, we all talked about this. 95 on Nvidia would be such a nice place to buy the stock. I wish it would give us that pullback. The pullback is here, and I'm not going to lie, it's a little scary now that it's actually arrived. Are you guys, right. Frank, do you feel the same way? Do you think Nvidia has like, are you looking at this as a dip, or are you saying, I don't know if I'm touching that?
No, I don't think that I believe any of this bounce right now. I think if we were to return back to our highs, then the bubble is back. And if we really are seeing this sort of pop in the AI trade, then it's going to go further. So this morning, I don't really buy it. I'm going to have to see more. But I'm looking at VIX right now and seeing what it's doing during the day. Just crazy moves all around. I couldn't get logged into my Charles Schwab account. They wouldn't let me in. I had a VIX position on it, VIXY, as a hedge. I was up 100% this morning, could not get in. So I'm stuck in it. They said the average wait time is like 60 minutes for someone to respond to you. So,
oh my gosh, is it just because there's so many people trying to log into their account this morning that it's down, or their servers are having issues?
I mean, this happens every single time there's something like that. Like it's not just Schwab, it's like every brokerage account does this. I don't know why.
That's crazy. That's wild. Yeah. Well, yeah, no, I mean, again, I think that's a very respectable position. When you look at this stuff, I think a lot of people, they are shocked by this volatility, but what is normal about this is that these are what pullbacks look like in the stock market, and they can go a lot deeper than people think they can. I mean, again, 2022, I think Frank was off to school in that year, and he wasn't paying as much attention to the markets during that time. But Chris, I know you and I remember it was like bleeding every day. Like every day market was ugly.
Yeah, the only reason I made money in 2022 was because the first half of the year I was so heavy energy and inflation that it
Oh,
pretty much lifted my
nice.
entire account, and then I was also trading the Japanese yen. So like the dollar the yen pairs for currencies, FX trading, and being right the first half of the year were really the only reasons that allowed me to make any money in 2022. It felt like an easy like January to April 2022, and then after that it's like just try not to lose money for the rest of the year because there was nowhere to go. It's like bonds are down, equities are crap across the board. And it was like even. It's like you had big rips to the downside and then it'd come all the way back up and then rip to the downside all the way back up. It's like it was hard to get a sense of like how bad is this going to be. And honestly, like it was a very manageable and I'd say even obedient correction. That's what's not happening right now. Like this correction, even in 2022, did we see a spike up to 65 in the VIX? No. We just saw several spikes in the 30s, right? But 2022 VIX was not anywhere near what we just saw in the last 3 days of the VIX.
Yeah.
I mean, this is crazy, right? Like all the stuff that happened in 2022, all these corrections were they're right there in the 30s. Very volatile, okay? But not those outlier single day spikes, which, and this is why like today feels kind of unusually scary and uncertain is like, it's nuts, man. But we can't say that we didn't see this coming. It's just when it happens and how it happens, that's what nobody knows, right? Like it is as good as a trader as we might think we are, or like, look, man, I've got hedges and my stuff's pretty orderly on a day-to-day fashion in like, I'm still watching this stuff like a hawk and maybe unnecessarily close, but it's like, I have to, it's my job, So I just think that in this type of event, when we have kind of these outlier moves, you just got to watch everything closely. And the most important thing would be, look, if you don't know what's going on, then this is what's going to give you some, you can have a stairway of mistakes that ultimately give you the wisdom as a trader. This is the type of experience. I mean, holy fudge, dude. Okay, by the way, this just card alarm's going off here. That can't be right. RKT. That's not right. Never mind. I just saw this chart alarm. See this? RKT 625 lows.
Yeah.
We're trading at 1750. So that's not right. Anyway, point is, if you want to, add some badges to your trading experience, it's days like this where you're going to remember how you either survived it or you didn't. And if you didn't survive it, you're going to learn from it if you want to keep trading. I'm all about survival, and I hate the fact that you kind of have to have these black swan events as far as preparation, because this is why they sting and linger so vividly in traders' minds, because if you can survive this, you can survive pretty much anything. But if you can't survive this, it's going to make you rework your plan so this never, ever, ever happens again. I'm just putting that out there as like a PSA for everyone trading. These aren't fun. None of this is fun. I don't care how good of a trader you are. I mean, okay, Warren Buffett sold all of his Apple stock, or, he's sitting on $300 billion in treasuries now. It's like, who cares? Did Warren Buffett, did he call the top? Not necessarily. I mean, the guy's been wrong for a decade and everyone's been giving him crap for it. And all of a sudden he looks like a genius.
Right.
There's going to be outperformers and underperformers and all this stuff. But the reality is, what are you doing to either one, trade through this, survive it, profit from it, learn from it? At the end of the day, it's, everyone has their own experience, but what we're trying to offer is hopefully some commentary and experience where it's like, we're going through it right with you. I wish I could say I had all the answers and like, oh, look, man, we saw this coming and I'm hedged like crazy and I'm up, 100 grand in everyone's account. I'm not. Like today is essentially, I washed a lot of profits in the last 5 days of trading where I was up on the entire year a lot, and I've given back a pretty healthy chunk that I'm not real happy with. So now it's about just, okay, what do I do from here? How do I navigate this?
Same thing for me. I mean, giving back a lot of gains on this year for sure. But the thing is, one thing here, I want somebody in the audience is going to learn from this concept that you're sharing, Chris, and what I'm about to say too is, if you feel like right now you're like, this is devastating to you, then the cold answer is that you were too leveraged, that you had too much size. But to your point, Chris, about survival in a time like this, if you're like, okay, I've been dead wrong, but my account's not destroyed by this, then you should be patting yourself on the back and saying, look, I survived drawdown effectively. And that's all you can do is trade, because nobody can see the future. Nobody knows, oh, tomorrow the Bank of Japan is going to do this, or Israel and Hamas are going to go at it, or Iran is going to do this. And nobody knows that for certain. There's just too many uncertainties in this world. So all you can control as a trader is your position sizing, and you can be modest with your approach to the markets. I've given back gains, but I'm not destroying my account by leveraging the crap out of it. So, and then you have traders like Frank, who's been on the right side of this move. He's been buying puts and making money on this move. And, you just mentioned, Frank, you're looking to scale out. Actually, let me ask you that. So with your puts that you've got, do you have anything left? And the ones that you've cashed in on, what's your kind of approach to managing all those puts that you've got?
Yeah, so the ones that were expiring today, I had to close out early because the move is so large. I have a bull put or bear put vertical on the Qs. It's at 450. I bought a call, and 430 I sold a call. So that's a 20-point move, but it's for Friday. So I got it at 581. It's trading at 1059. So I'm not really sure at this point. Like, I've taken profit, and now I'm wondering if I should just let this trade run or take the 80-something% profit that's here. I'm sure Chris would say take the profit, but with a move this big, it feels like if this continues, I could manage like the whole 20-point move by the end of the week. But
yeah, and I think that's the key here is for anybody who's listening, whether you are bullish, bearish, whether you like gold, whether you like the NASDAQ, whether you like Russell, silver, oil, whatever you are trading, the key takeaway during a time like this, I think, is just hold, have your opinions on what the market's going to do, but don't destroy yourself if you're wrong. The first question I think that, any good trader asks himself is like, if I'm just dead wrong about this, what am I going to do? Because there's no certainties in the market. So if you're like, okay, I don't know what's going to happen for sure, but I have a good educated guess, take your educated guess, but appropriately size it so that when you're like me and you've been wrong about the NASDAQ for 2 weeks straight, you're not getting destroyed by it. You're just dealing with it, and normal drawdowns are going to happen to everybody. So
the biggest problem is closing out, and that's when you're in profit. Don't get greedy. Take your profit if you're happy with it. I wouldn't say just sell out as soon as you're in profit, but if you're happy with what you've made, like this morning, I think I got very fortunate in this move. I was just hedging myself against severe moves like this, and it happened to work out today. But it usually doesn't work like that. So knowing when to close out is good, because you can see especially in options, you can see your trade go all the way back to where you bought it at, and you can lose money at the end of the day too. So closing out is important. Nick, you were in NAS and you got out of there before this huge drop too. So it's like managing wins and losses, making sure that you're not staying in something too long or too little. That's the hardest part, is closing out, because people see these tremendous gains and don't know what to do with it, and they get comfortable in this, and they want to see more and more, and then when it doesn't go their way, they don't make as much money, or they lose money, and then they quit trading or something like that. So it's
almost like it's almost like you just want to be responsible, and whatever your opinion is, be responsible with it. If you're bullish and the market's made a really good move in your favor, be responsible with that move. Maybe trail a stop. Maybe make sure your position sizing is not too big. If you're feeling incredibly good on a day, then here's a lesson I learned, Frank, recently. Oh my gosh, I made so much money on that day, and I did take a little bit off the table, but I held majority of my positions and I didn't trail stops. And hindsight 2020, but I gave back so much of that incredible day on the following sell-off that kind of occurred. So I think it's just, be a responsible trader, especially in times like this. You'll thank yourself later, because when the floor falls out from beneath you and you're just wrong about stuff, you're going to be glad that you didn't over risk. Chris,
And don't
anything
be
to add on
loyal
that?
to a trade,
Yeah,
because the market is not loyal to you. It wants to take all of your money.
That's
so when you're happy and in profit, take the money.
Agree. That's why I stick to mechanical profit targets. It's like, if you're trading options, you want probabilities. Love your 15 percenters, love your 25 percenters. 50% are awesome, 100% are rare. 1,000% are amazing. But if Frank was going to define his career by 1,000 pip wins, or I'm sorry, 1,000% wins, like, it's not the highest probability. So I mean, look, everybody should be jealous of like Frank's conviction to those trades and the way he played them, because like if he bounces off of me, I know that I wasn't real pleased with like the duration of those trades, right? You're doing a 1 day trade where what you do, Frank, you did like a Friday trade for a today expiration, correct?
Yeah.
Yeah. So I mean, like, look, I'm so happy for Frank to have profits on those, but the first thing I would have been doing this morning is taking profit just like he did.
Yeah.
But like I said, I mean, if your career is going to revolve around like 1,000 pip wins, or I keep saying 1,000% wins, it doesn't happen very often. And that's why I'm thinking about like even all these traders out there that, I mean, I don't know how many times have been typed in the chat today, but buy Bitcoin, buy gold. It's like, okay, cool. So gold goes up, maybe another 5%. Bitcoin, if it's down to 50K and it's been shredded for a 30-40% pullback, Ethereum's down 50%. It's like, I just PSA for the Bitcoin maximalists out there. It's all connected. If we're going to see a giant 20, 30, 40, 50% correction in the overall markets, I'm sorry, but Bitcoin's going to be down 70, 80, 90, 99%.
Yeah.
Maybe it forever goes away. So it's like none of it is guaranteed ever.
I
And so
mean,
if you
that's
mechanically
such a
take
good-
trades and profits, it's like
That's such
it's
a good
just ups
point
or
about
downs.
Bitcoin, Chris, today, because again, I'm sorry, but to add to your thought process there, I'm sorry, but if you think Bitcoin is not just a call option on the NASDAQ, right now in this current world we live in, you are wrong, right? Maybe in the future, maybe the correlation breaks down between the NASDAQ and Bitcoin, but right now, buying Bitcoin is a call option on the NASDAQ. That is simply it. You're going to get hit harder if the market dips, and you're going to make more money if the market rips. That's how it's been for the last few years. Take a look at all the major market sell-offs. 2022, there's Bitcoin. The rally in 23 and 24, Bitcoin's done very well. Unfortunately, Bitcoin is not the safe haven, uncorrelated bet that many traders wish that it was. If you want that, gold has proven that over many, many years. It is moving lower today, but it's doing better and better than the other ones. And, over a long historical period of time, its correlation to the S&P 500 and the NASDAQ is pretty low, which is a very positive thing. That's why a lot of investors, a lot of traders like gold, is that it's not as susceptible to just global risk events as other things. Now, let me be clear, and I just want to point this out. The game plan on gold for a recession is, and maybe Chris, you can add or correct me if I'm wrong, but I believe that usually it is, pre-recession, gold gets moving higher, people get a little bit nervous, and then on the onset of a recession, if we do get one, you do see gold dip first. Then when the money printers come on, boom, gold rips through the highs. That's how it was in 2020. It was trading higher before 2020. Then 2020 hits, gold takes a big dip, and then proceeds to greatly outperform the stock market in that year. Is there anything you would add to the gold playbook for anybody who's, looking at gold right now?
I think gold it's going to do what it always does, which is maintain some type of store value. It's not like people are going out and making more gold. It's harder and harder to mine. It's harder and harder to justify. What I think is going to be interesting moving into the next year or so is I know that you guys have both traded a lot with gold miners. And I wonder if commodities in general are going to see more of like the miners catch up with the spot prices. But gold, let me just switch up to the chart here. So gold, volatile, but I still think really, really well supported at 23. It might not come back to 23, but I could still see a combination of technicals where we pull back to 2300. We maybe test this trend line at 2270 or so. If we just break all-time highs again at 2480 and rip, I think the gold bulls are going to have a really strong case to possibly hit 3000 sooner than we would hit maybe 2000. And so let me ask you guys this question before we go. well, I guess we have time. What am I doing? But SPX, are we closer to hitting 5,000, or probability wise, are we going to hit 5,000 before we hit, at this point, I was going to say 6,000, but 5,000 or 5,500? What do you think? For right now, we're trading at 51.83 on the SPX. Are we hitting 5,000 or are we hitting 5,500 first?
Frank, you go first.
Pure thought.
I don't know.
I don't know. All right.
How am I supposed to know this?
Nobody knows. I'm just asking because, you know, we're sitting here, like when we were consolidating last week, and I look back at this chart and I'm like, man, it's pretty obvious, right? It's like we broke a trend line, we pulled back, and we rejected off that trend line. That was very similar to what we did in April. We broke the trend line, retested, and then we went lower. And what was funny is when we retested with a gap higher, just like we did here. Gap higher to retest and then fall. So that Wednesday to Thursday trickery, where the market was up on a gap high Wednesday, pushed high through FOMC, Thursday gapped higher and just absolutely got smoked. That was exactly what we did back in April. Now,
there's nothing telling us now that it should go back up, except maybe that we're close to the 200-day moving average.
Agree. I think, look, all I think about for going up is, like I said, there's good and bad, right? The good this week, I'll go back to the VIX chart because that's where I summarize this. The good this week would be that the 1,100 companies we have reporting earnings, which is a decent chunk. I mean, over 7,000 companies roughly. So let's say like 7,500. We've got like 15% of earnings coming in this week. We've already seen a pretty big retreat on the VIX. And so, you know, for a one-off VIX event, I do think that things have settled down. But there's a big difference between the VIX at 38, like it was through most of 2022, and the VIX back down below 20. Right? Above 20 is a high volatility environment. 15 to 20 is kind of the sweet spot. 15 or lower is low volatility. This is on our charts now as something we're going to remember. Like, I'm not going to remember what my P&L looked like, or I said I will remember what my P&L looked like Sunday during futures open and what markets looked like today during opening bell. I don't love it. You know, I mean, I'm down $38,000 today. Last week I was up like 20, and then I was flat, and then I was down like 10 on Friday. And today it's 36. So like, that's a big swing to me, man. That's like $40,000-$50,000. That's a big swing.
Yeah.
So I don't like that. You know,
that's the nature of these things. I mean, that's the for most traders, investors that are positioned more on the long side of the indices, that's how it goes. You know, you gain slowly and then you give back a bunch. The question now is, again, to your point about where these, you know, is this going to be a buy the dip today, or is this going to be, you know, further downside? I really do think that when you look at the NASDAQ, S&P, these 200-day moving averages are important to this market. I mean, if we close strong above the NAS, or on the S&P 500, if we, you know, we didn't quite hit it on the SPX, but did we hit it on SPY? Nope. We still have maybe some room to go lower on the S&P 500. But look at the NASDAQ. I mean, the NASDAQ is actually somehow on a day like today, I would have expected tech to be massively underperforming. Tech is holding in there with the rest of the market, which is, you know, very interesting. Tech down exactly the same right now as the S&P 500, you know, the full market index. We'll see. Again, I expect the market to be all over the place today. The VIX has given back a ton of its upside today. But, you know, we saw this on Friday too, guys. We saw Friday, huge spike up, came back down, and then look what happened the next day. So really a lot of uncertainty out there today.
Yeah. And looking at the, like I said, price action this week is going to be important to watch. I mean, today's candle, if we can hold in there with some green, that's probably a good thing on the day. I wouldn't be surprised if we come back and try to retest, but I think what's going to be important this week is we don't necessarily break any lower. This is already an incredible amount of damage from 1 to 3 days of trading that if you think about opening bell, closing bell, all the action's done pre-market, post-market. I mean, yeah, we had some volatility on Friday during the day, but it's like all the damage was done Friday or Thursday to Friday with that gap. And then, of course, you know, Friday to Sunday night's futures or today's open, like a lot of the damage was done. And Nick, when you mentioned tech performing okay, just look at the Mag 7 today. I mean, Apple was down to a very attractive technical level, right around, you know, $197, and it got bought right away. And think about earnings. Mag 7 earnings weren't that freaking bad. You know, Amazon missed on revenue, Tesla missed on revenue, but Microsoft was solid, Google was solid. I mean, even what we thought was priced to perfection, you're still getting. In fact, I did this last night. This is the type of stuff that we do when we're, you're full-time trading. I actually went into one of my 401ks and I reallocated everything for a money market instrument and a large cap, which pretty much only buys the Mag 7. That's my targeted fund. I'm going like 75-25 on that for right now, because if money's going to flow into quality, this is quality to me. So the Russell small caps, trash right now. It's garbage. This is what the market was leaning on and riding on this year, was Mag 7 carrying the way. And then all of a sudden it wasn't even Mag 7. It was what? Apple, Microsoft, and NVIDIA. Well, NVIDIA is now questionable, right? But Apple's still quality, and their earnings just proved it last week. Amazon had a miss in revenue, but it still made a ton of money, right? Microsoft and Google were fine. So anyway, I mean, are we going back to this narrow bull market? I don't think so. I think right now, like a lot of sentiment damage has been done, a lot of technical damage has been done. But to see that the markets have ripped on this immediately isn't a huge surprise in the short term. I just wonder if it's exactly that. Is this a short term rally where this gets faded and things get way worse for wear? We don't know.
Yeah, we'll have to see. Again, market could be anywhere by the end of the day. Be very curious to see how these charts end up closing out. I'm going to step out. If you guys would like to keep going, or Chris, if you want to take over the show for a little bit, Frank, if you want to head out too, all good either ways. I'm going to take a break. I've been on the air for a little while, so leave it to you, Chris. You got it from here if you want to keep going as long as you want. I don't think we have anything else planned for the stream today. So if I'm wrong about that, the stream crew can correct me. But
okay,
I'll give it over to you, and we'll see you on the next one.
All right, Frank, you want to stick around for just like 10-15 minutes?
No, not really. I think I'm going to go.
All right. I'll do this.
I'll talk to you tomorrow or Wednesday.
That's fine. I'll do this. I mean, we had some good commentary running there. I will gladly take for the next like 7 minutes, if Frank's going to bounce, 7 to 10 minutes. I'll just run through some charts, some questions, requests. Anybody want me to look at a certain thing? I'll go through that and just hold the fort down for another like maybe 10 minutes or so.
All right. So, appreciate it, Chris.
All right, sure, Frank. I'll see you soon. Congrats on the 1,000 bagger. That's awesome.
Thanks.
Cool.
Bye.
All right. So if you have any requests, my poll report here, this is usually my top down list. I've been adding to it the last couple of months, but for the most part, it's your major indexes, your S&P, your NASDAQ, your Dow, your Russell, volatility, which obviously has been the big story the last couple of trading days, the dollar, this is dollar index, oil and crude oil futures, natural gas, gold, silver, Bitcoin with its ETFs, Ethereum with an ETF, copper, and then Japan. Obviously, we've seen the deleveraging in Japan and the huge dump where all of a sudden they're back below those 34-year drawdown levels, and not sure if the BOJ has something up its sleeve, but it's weird. It's a massive move in the Japanese index. The FXY is my long Japanese yen play. The German DAX, the FTSE, China is mildly off. It's red on the day, but not too bad. And then your Mag 7s. I'm also tracking. We didn't mention this on the session just with Nick and Frank, but for a moment today, the 10-year and the 2-year came out of their inversion for the first time in like 400 and some trading days. I think something close to that. We're back inverted by about 1/10 of 1%. But we're just on that verge of this is called the steepening. I mean, if you look at our rates really quickly, if I go to the 2-year, the 2-year has fallen off a cliff. But if you look at the difference between yields and bonds, okay, yields were dropping like crazy. Bonds have been ripping like crazy. And here we are looking at the yields coming back, and the bonds are likely going to be retreating today. So if you look at your short term, red on the day for the short term, this is 1 to 3 year, red on the day for your 7 to 10 year. And even red on the day after a good run. I'm long at 82, by the way, on this. So 82 to 98's, pretty solid to me. I just wonder if there's more of a safe haven rip in bonds, or if this is kind of done for a while. I mean, we're coming back to the same levels we saw back here in late 2023 into 2024. But anyway, all right. So let me go through and see if there's some requests. Brazil stock market. Okay, I can take a look at what's the ETF for Brazil? Is like EWZ. Does that sound right? Yeah, this is be the one thing that I would analyze. Emerging markets are going to be pretty typically correlated to the S&P, so I would be careful on this. But we're sitting at some pretty strong levels. which I don't mind. I mean, look, you got an index that's 2650. Okay. I mean, so if I'll just say this, I'm looking at the chart, being objective. I'm not in any EWZ right now, but I don't mind this trade with maybe either one, a cash secured put to start the campaign right here, or two, another level down here. So if I were just to buy shares of EWZ, I like this level and I like this level. So if we go from 2650 potentially down to the COVID lows around 21, if we revisit those levels, I would be a buyer that doesn't tie up a bunch of capital. As long as this ETF is liquid, and if I own shares, so I'm not super sensitive on trading all sorts of derivatives that could be good or bad. So there's my. In fact, I'm going to add this in as a foreign market EWZ. I don't mind Brazil as a foreign market because I have been watching this, especially when it came to like COVID. I was interested in Brazil, and we're talking about the BRICS economies, and if it's going to be an anti-dollar player, the U.S. is losing credibility, all this other stuff. So anyway, let me put it in here. Ethereum will go. That's copper. That's Japan. So below China, I'll put EWZ. So there's my Brazil. Let's see here. EuroCAD, sure. EuroCAD. Okay. EuroCAD, I've actually been looking for an opportunity to find a top and bottom, and I've been saying this for the last, 10 years, but really, I bring traders' attention to the market seasonality, and when it comes to Forex trading, August is usually a top and bottom month or a transition month. EuroCAD's had a pretty good run here from 46 up to 52 and change. Technically speaking, I could see if oil is fairly stable. I could see again, I want to see a confirmed move where if EuroCAD rolls over to the downside, I would rather be looking to short the EuroCAD for right now. So I'm looking for an opportunity to short. I probably want to see a 4-hour or 1-hour chart tip over on some indicators to show me some bearishness. Dollar Swiss, inefficiency the last 3-4 trading days, meaning we've dropped a ton. I was looking at this as a potential head and shoulders trade, which now looks like we're going to deal with some more indecision. So this is either one of the world's deepest head and shoulders ever, where we end up holding this right shoulder and somehow working our way back to this neckline, or more than likely we're facing some more issues like this. Is it going to be an equal low, or is it going to be connect the dots here? Okay, and connect the dots here, and we're about to embark on some type of worst case move where we take out some stop losses, we run some stops at these lows. But the way that this is falling, again, the good thing about the dollar Swiss is it's not the Japanese yen. It's not behaving like, yes, it's down and we've dropped 300 whopping pips, and okay, but it's not down 1,500 pips like the Japanese yen. So, I'm personally long in the dollar Swiss for some carry trade. I know that could be unraveling here pretty quickly, but it's not behaving like the unraveling we've seen in the Japanese yen. So I could still be wrong and nurse myself a little bit of a drawdown, and I'm okay with that for right now. But what I'm watching here is if we technically hold this level, okay, and we get a bullish pattern off of that level, I think we come back into the halfway point, or this is a range, and we'd have this as support and this as resistance. But that has to hold. I will say that definitively. We have to hold this area. We have to hold this area. If we're not interested in holding these lows, which that price point is going to be around 83.50 to 8,300, and I would even say this: if we have 8,300 and a nasty spill down to 8,000, I'm still looking for a bullish pattern, but I'm just going to be patient and keep my trade size very small, or any type of add-on trades would be with bullish confirmation. Okay. All right. Dollar Swiss, we're good on that one. Thinkorswim. Yeah, so Schwab and Thinkorswim, I believe, have had problems all morning with logging in. Okay. Apple drops $1 billion in shares. Oh, are you talking about Buffett? Buffett dropped the Apple position. Do I think gold will go up? Longer term, yes. Health sector. The healthcare sector has done pretty well. That'd be healthcare, right? XLV. We're creeping up here towards these all-time highs. We're giving some back. This could be setting up for an uglier topping pattern on the sector itself. But I actually did put some exposure in last week in J&J. I have a 140 and a 140 by 20 credit spread. So I'm actually willing to own some shares of Johnson & Johnson. I do think in the U.S. equity space that healthcare has a good position with companies that have pretty good balance sheets. A sector with a, let's say the next 3, 5, 10 years of baby boomers retiring and needing the healthcare, assisted living spaces, downsizing, whatever it is. I think healthcare costs are going to continue to rise, and this is probably a pretty good space to be in. So, look, if everything's falling, everything looks like crap. But as far as longer term and stability, I think that healthcare is a pretty good spot right now. Commodities wouldn't be a bad spot either, but it's just tricky to trade them when you're using futures. Okay. Let's see here. NWO, American dollar down, market crash. I'm barely catching up on. Okay, BlackRock Monday. There you go. I mean, this could be seen as a Black Monday. This could be a Black Monday 2.0. Okay. All right. IWM perfect entry for a short in IWM. I mean, possible. I mean, IWM is certainly shed a lot. If there's, like I said earlier, I mean, if there's any chance of stability, there's really good past resistance in here that with the kind of overreaction of things stabilize, that could be a good, I don't know. I'm going to trim some of my IWM exposure. I ended up taking some good profit on that rip to the upside. Not nearly what I wanted. I did not get the run that I wanted, but I was long with 185 calls and 182 calls and 200 calls, and so I closed out most of those for a good gain, anywhere between like 200 to 300% of those call options. But I also took on some 240 and 245 out of the monies that were dirt cheap, and I did them with debit spreads, and they're pretty cost effective. But I could be risking about 1% of those trades. That right now looks like that's going to be my risk, and I'm probably going to lose that 1%. So where we're sitting is an important threshold, right? I don't think the IWM small cap trades looks nearly as attractive as it did when we had this, what I thought was an ascending wedge breakout. I thought we had a bull flag that was looking pretty promising. And if a broader market, healthier broader market was going to be a liftoff, that the Russell could maybe be the catch-up trade. It's still volatile. I get it. Could it surprise us? Maybe, but I doubt it. I think that this would be one of the most ridiculous outperformances of any index if we're going to go ahead and make all-time highs by the end of the year. So probably just going to, eat my lunch on the IWM. I made some good profit. I'm giving back some. There's a Hail Mary chance we get back to the 240 to 245 window, but I doubt it. So at this point, the rest is going to be, what else do I want to do? Well, I could probably start flipping around to some butter wings, broken wing butterflies. And that's another thing that I'll be watching for maybe this week and next week, is because we have some good IV rank right now in the markets, and implied volatility is massively high. That swell in IV is a good opportunity to look for some trades to short and sell some options. So one thing I could consider is, if the IV is high enough, maybe doing a broke wing butterfly up here. In fact, I'll look at that. Let me see if I can. Let me check that one out right now. Let me look at the IWM. Actually, you know what? I'm probably going to have to go to the RTY. So RTY would be, I could get a little bit more fill on this one. RTY would be my E-mini Russell. So let me go to RTY feed. I already have some broke wings on this one. And you can see it down here. So it's an 1875. That's my pin price. This is out not this Friday, but next Friday. The tail profit's about $1.15 credit. I've got a 10x profit in the peak if I can trap this thing right around this 1875 pin price. I don't know. 1875 is obviously lower. If we throw down a little bit lower, we'd have to drop another 8% in the Russell. If that were to happen by not this Friday, but next Friday, I'll generate probably about $2,000 per account, which is about 1%. Nothing crazy. But that's certainly better than keeping a whopping $115 versus making, $2,000. It's pretty good. So anyway, market's destabilizing more. I mean, all I think you're really seeing there, Def Hunt, is that the market is just, every single time it just gets more and more levers. Like, think about the layers upon layers upon layers upon layers of leveraged instruments that are out there. That's the problem. And that's why this type of event is so noisy and ugly and scary, because you take all these things, instead of just having the S&P 500 at, let's say, 100 million shares, okay? Instead of having this and that's all that you can have, what you have is you have a layer that represents another 100 million shares, and a layer on top of that with another 100 million shares, and a layer on top of that. So all these derivatives that are put on top of the actual nominal value of this asset are why these deleveraging events are so bad. Because when all of a sudden these are looking bad and scary, and it's like dump it, dump it, dump it, dump it, dump it, dump it, sell everything, that's when we have all this chaos. That's what today is, right? So, look, this is this is essentially 2022 accelerated. I would call this the deleveraging of 2022 2.0. Whatever, call it something fancy if you want to, but that's what it feels like, right? I posted this in my Discord today. So right here, when I got into my chat this morning, I just said, we're going to remember today. This is either Volmageddon 2.0, the 10-2 reversion, the Fed misstep, the Asia meltdown, or some type of, deleveraging 2.0. That's what it feels like. That's what it looks like. And then we come back to prices, for the week and for the day. Things are just getting started. There's a lot of trading ahead. If we close today green, okay, great. I would say that what's going to be a key metric for this week, price action wise, is that we don't fade it hard and close in fresh lows. If we're going to stabilize for the week, great. Okay. But I don't think we're just, if we rip straight up and we close the gap by the end of the week, okay. I'm still super skeptical, but I'd be much happier seeing that happen. If it does happen, I'd love to see it, right? If it happens, then I'm going to be selling broken wings, and I'll be repositioning. I'll start minimizing some of my futures exposure. I'll be doing all sorts of stuff if the market just uses this as, a week to buy everything. But I do think that rip is short term, because if we came up there, I'd turn into a bit more of a, corrective move, and we have a channel or something like that where we go high to low, lower high to lower low, and we have another downturn that maybe tests this level. And then we really see what the market's made of. And this is not happening immediately, but we're going to see what the market's made of maybe at those April lows. But I think we'd be breaking some pretty big milestones if, historically speaking, the first half of the year is positive and the second half of the year is absolutely atrocious. That usually doesn't happen in the markets, But right now we have look, think about it this way. If the clock is running, it's countdown to Jackson Hole. For step one, would be countdown to Jackson Hole and countdown to the rate cut in September, which right now the rate cut probability is now jumped up to 90+% that the Fed's going to cut by 50 basis points. I don't know if that's the case. Maybe it is. Maybe it's not. Would this be now a disappointment that the Fed can cut rates by 25 basis points and the market's going to absolutely hate it? I don't know. Does this change over the next 3 to 4 weeks? Or the next 5 or 6 weeks before we have that September 18th decision, where all of a sudden it's going to be, look at this. There's a 10% chance that the market's going to see a 75 basis points cut. Like, this is probably a little bit overstretched. So I'd be interested to see if this goes down a little bit and then pops up another histogram that says 25 basis points, right? And we go to that 5.25 versus going emergency cuts. Maybe. Because if things can stabilize and the Fed can just cut based on inflation, not cut versus the softening economy and this potential uncertainty, then I think that shows a bit more resiliency in the economy as opposed to what we're experiencing today, which is, oh my gosh, the sky is falling, right? Because I know that's what it feels like. So, all right, on that note, I'm going to jump. I got another trading room to get into here in a minute. So thanks for being with us today on the show. I know we had some big numbers today. 1,800 plus viewers out there on YouTube and Twitter. And if you're not out there, like and subscribe, all that good stuff. Play the game with YouTube algorithm. If you like the content, we're, doing our best to bring good stuff every single day. So Nick, Frank, the team at A1 Trading, thanks a lot. As always, we'll have a busy week ahead. And yeah, if you're interested in following me out there, I've got some stuff as well. I know they'll post my stuff in the links, my YouTube channel, my Discord, and additional services. So, feel free to check it out, and happy to help. All right. Talk to y'all soon. Thanks. Bye.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.